Hey guys, it's Willie from Panda.com. As you can see, we're going to talk about diagonal spreads today, but we're not just going to talk about dragon diagonal spreads. We're talking about double diagonal spreads. So in a previous Beastly Trade series video, I talked about the dragon diagonal spread, and it's usually, you know, um, like a longer term spread, and it's a bigger size than a normal diagonal spread. But what about when there are times when let's say the stock that you want to trade is low volatility or is in a low volatility environment, but you think there's going to be a big move up or down by the time your long options expire. Well, double dragon diagonals could be a potential trade that you can consider. So basically, you have some long options, usually leaps, way out in time, usually about a year or more. And then in the front months, you're selling wider strangles against it. And then over time, you could potentially collect enough short premium strangle to offset most, if not all, of your costs of the long strikes. And if you get lucky enough, if the stock moves really big in either direction by the time your long options expire, you could potentially actually make money on both sides. So it's something that you might want to consider for maybe like a small part of your portfolio, especially for stocks that you're not sure where they're gonna go. You think they might have like some big crazy swing. Like maybe it's like a biotech that might have like a vaccine or something like that, or like a treatment, or maybe you think it's like the next Tesla potentially, or like some other, like maybe like a space stock, or something that has, you think might have like a big potential, but you're right now you don't want to commit as much capital to the stock. And yeah, so I'm gonna take you through my Tastyworks platform, and then we're gonna go over to the my one of my spreadsheets to see maybe like a little bit of the math behind it, and then if hopefully there won't be as much audio issues, so I apologize in advance for any of that. So yeah, let's go to my Tastyworks platform. All right. Hey guys, so I thought I'd show you how to set up a double dragon diagonal in the Tastyworks platform. So what you can do, you can go to long iron condor, and then once you're there, it depends on how far you want to go out. I plan to personally take this as far as I can go. So this is 2 years and almost a little under 3 months. So I'm going to start with the 40-42 straddle, because I think there's opportunities for both long and short. So I'm going to move. Now I'm going to start moving the short strikes. I'm going to, let's see, I'm going to take it to the December. Expiration cycles. Let me see if I have this right. Oh, I do. So I'm gonna go to the 30. Let's see. So that looks about right. Let me just double check. Basically, when I'm looking at the order entry, I want to make sure I have the long sides in the January 2023 cycle, and then now I can go back to the December. I'm going to widen out this side to as far as I can go. I mean, the IV rank isn't that great because it's only 19, but that's why we're putting this on, while the IV rank is relatively low. So going to adjust this. I already have a pre-existing, just a regular diagonal, so you can ignore that if you want. I'm going to see that. Okay, so I think I can get at least a buck on the 29 put strike, and then the 65 strike. Let me see. That gives me about 24 points away, and then 41. Wow, so there's definitely more risk on the upside, but that's fine. I think there'll be opportunities for both. So I'm gonna see if I can get filled on this at this price. I'll probably cave in. Oh, I got filled. Oh, that's not good. I got filled at a better price, so that means the mid price is overpaying it. But it's good that I got filled right away, just to show you guys. 35.40. Actually 35.01, I believe, was the actual fill price. Yeah, that's pretty bad. So originally it was supposed to be $3,540, but they felt bad for me, and they filled me at a better price at $35.01. But that's trading. Sometimes you get lucky in a way. So this is just a setup, and then next we'll look at the potential profit opportunities. All right, so I'm gonna break down a little bit of the math of a double diagonal or double dragon diagonal in general. Normally for a double dragon diagonal, I would put this on 10 lot at a time. But because like the market's getting kind of weird, it seems like it's rotating out of tech stocks into more of the beaten down value stocks after Pfizer announced their their COVID vaccine, which I think is good news, but it's still gonna take a little bit of time for it to work out. I think the market may have overreacted it a bit. There's still some bad companies out there that I think that'll go bankrupt regardless, unfortunately. But that's just my personal view. But back to the topic at hand regarding the double dragon diagonal that I did on Neo. Originally, I wanted to put this on at a larger size. I mean, that's the whole point of a double dragon diagonal. It's basically a double diagonal, but on a larger size. At first, I was looking at Tesla to see if there's maybe like a little bit more room to run, but I think Tesla might be a little too volatile for now. And for any uh, double diagonals in general, I think you want to start off with a low implied volatility, and then you want volatility to expand in either direction. But you don't know which direction first, so that's why you put on a double dragon diagonal because you want to capture ideally both big moves. I think at some point Neo will have a really big run up. It could be the next Tesla, but at the same time, it could also be the next Luckin Coffee. I like Neo's concept of the battery as a service. That looks very interesting to me. Um, and it seems like it's trying to market itself as more of a upscale uh, car manufacturer, and I think a lot of electric vehicles has a lot of not just hype, but also a lot of just interest in general, both from Chinese consumers and American investors as well. But we'll see. I mean, this could also blow up. It could maybe tank first and then go up a whole bunch, or it could go up a whole bunch first and then tank later. But that's why we set up a double dragon diagonal to potentially make money on both sides. Um, And in fact, you may be able to make some money even if it just goes sideways forever. So for example, I don't think it will, but let's just say for example, Neo, it flattens out exactly at $41 for the lifetime of this trade. So up until January 2023, it stays flat, which is very unlikely. But you still see that it can still potentially make some money. Basically, for double dragon diagonals, I like to map out like the potential cash flows that I could eventually have. So as you can see, I have kind of like a skeleton um, spreadsheet set up so that I can eventually fill in the the strikes in the different months to see what I can possibly get. The long strikes at 42 and 40 will you know will probably stay that way for maybe in the next few months. But then I over time I expect it to either go up a lot or go down a lot. So as you can see, 65 minus 42, that's a potential $2,300 profit range, and then to the downside you have a $2,100 profit range. I just started off the trade as a one lot just to see where I could get filled, and then over time I plan uh, to kind of maybe backfill the trade a little bit. I mean the trade could get away from me if I don't pounce on I guess maybe like there's still a little bit of indecisiveness in the market still. I guess people maybe want to wait until the official electoral college actually gets to vote. I mean, this has been a crazy year, so there's still like a small outside chance that maybe they do find some voter fraud, and then who knows? I don't even want to think about it, but yeah, it could cause a lot of chaos. But I'm just gonna go with the sort of like the mainstream view that um, Biden will be the president elect, and then by January 2021, he'll be the official president. But regardless, like I could still see some big moves up or down. But let's just say for argument's sake that the stock for whatever reason flatlines. I mapped out the potential cost. Let's say I'm able to maintain a cost basis of around 3,501 for the next series of trades that I put on. And let's just say, for example, that um, for the short strikes, so as you can see, the sum of these is about $3.09. But let's just say, for argument's sake, that following Tasty Trades trade mechanics, I can only capture just half of the premium that I received at a buck 50 for 25 months, assuming I stay consistent for the duration of this trade. I should be able to collect, um, 25 uh, payments of 150 bucks, so that comes out to 3,750 on each one lot, and that could give me a small profit of 249 over my original cost basis. Although, just out of curiosity, I'm just gonna see what that is in percentage terms, and 7% isn't like nothing to write home about. But that's assuming that the stock stays flat. So if I'm able to capture the exactly the width of the strikes, again, this is just a rough estimate because double diagonals in general are kind of a pain um, to manage. Um, so let me see if I multiply this by 100. So let's say I collect on the upside 2,300. That could potentially be a 66% return. But again, these are just estimates, and then to the downside, it's It's a well, actually, I think I misspoke in the beginning. On the downside, I only have 1,100 dollars to the downside, but instead of 21, I don't know what I was thinking. I think it's just like bad math. I'm a little bit fried from like the trading day. Um, but 1,100 over like a $3,500 cost basis. So that's an interesting trade. So 31% on the downside. So that's roughly a if everything goes right, if I'm able to capture both sides, that should give me about a 97% return on capital. If everything goes right, and I don't freak out and I don't make mistakes, yeah, I mean, if you're able to capture um, both sides of the move, you could potentially make 97% on this trade. But you have to be patient. Obviously, this is slightly over 2 years worth of a trade. I want to migrate more towards these type of longer term trades. One, I think it helps with my discipline, but sometimes there are times when these annoying market moves that it throws off my mental game a little bit, and I think these type of trades help um, maintain some sense of calm. And of course, the strikes will probably change a little bit as the months go by. So for example, on the short side, eventually, if Neo moves up, on the put side, this eventually might become a more of a more stretched. So for example, I might have to chase on the put on the short strikes. This might move up to catch up to the price. So for example, uh, next month, this could become a calendar. So at exactly the 40 strike, and then I might have to move up the call to avoid getting assigned early on this particular trade. This might instead of 65, it might be 75 next month, and so on and so forth. Or it could be the other way around. Could tank, and then I I might consider depending on how far it moves down. I mean, it could actually blow through the short strike um, on the put side, and then I would have to just take this off at a early profit, and then move the call side to become a little bit more of a calendar. Instead of 65, it might become 45, 42, whatever it might be, and then it would probably consider either doing another type of trade, um, maybe some strangles in the meantime. But it all depends on how big and far the move goes. So this is something for consideration for you guys. Like this isn't, I wouldn't consider this a bread and butter. This is more of a trade for, I guess, like if you're expecting a big move on a stock that you're interested in trading, but you don't know which direction, and if like the implied volatility is pretty low, this could be something that you can consider. But of course, like everybody's risk appetite is always different. So, please, rewatch this as many times as you need to, or if you have questions, I'll be happy to try to answer them. And if you can consider liking and subscribing to the channel, that would really help me out. I really want to make more of these type of videos, or maybe like even in like a follow-up video on how this trade is working, or maybe not even, or maybe if there, I ran into some trouble, I want to maybe show some of the bad sides of these type of trades. Um, but regardless, thank you for watching, and I hope you have a great one. So I'll see you later, guys. Thank you.